Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Thanks for listening to the show, February 4th, 2026. It's going to be an interesting show. Software stocks are getting crushed again by Anthropic's wake-up call. Private payrolls missed amidst a dramatic slowdown in job creation. The number one thing that I look for is that first Friday of the month jobs report, which we will not get this week. So we're relying on ancillary data like that from payrolls company ADP, which does private payrolls. They're not the end-all, be-all defining stick, but they're pretty close. They're good. They're not a great piece of data for me. AMD is plunging after their outlook failed to satisfy and quench curiosities on the AI boost. So AMD is down 15% today. Palantir is down 10% based on valuations, not based on revenues. They were great. Earnings were fantastic, but based on the valuations that we're paying for that stock, for their revenue and for their earnings, that stock's down 10%. Some people would call that finding its level. They say that water finds its level, that stocks find their level. I agree with that statement in general. If you were to take a look back about a year, Palantir's gone from $97 a share to $140, which is where it's at today. But at one point in time, it got considerably higher at $206. So it's now off roughly $66. It's becoming much more interesting to me as a discount on a former momentum play. Now, again, I look at momentum stocks. I look at growth stocks. I look at growth in income, and I also look at income. My least amount of focus is on income stocks. But Palantir is down 17 points today, down 10.8%. Taking a look at the market numbers today, the S&P 500 is down 15, down 0.25% to 6901. The Dow Jones Industrial Average is up 389. That's up 0.75%. Diverging markets there. The Nasdaq's down 249 points, down 1%. The Russell 2000's down 80 basis points. So 3 of the 4 major indices lower. Bitcoin's sitting down $2,900 at 73,818. There's a lot of worry that if Bitcoin cracks into the 65,000 area, that it's really going to shake out a lot of investors, and it's going to cause gold and silver to pull back as Bitcoin's considered digital coin with speculation. Gold is considered speculative at this point in time based on the momentum that it's had in the last 18 months. 10-year Treasury sits at 4.27%, not doing a lot, telling us that it's not wanting to go below 4% until we see the Federal Reserve cut interest rates probably in the back half of 2026 after we get a new Fed chairman. My opinion on the Fed chairman, I don't want to see the interest rate cuts until we see inflation lower. With that said, the interest rate cuts that are likely due to Trump's administration wanting them, it should be short-term gas on the stock markets. Although the stock market may be getting smarter and starting to think, okay, after those interest rate cuts, what do we have out there? Potential inflation. And Wall Street hates inflation. In the past, I've referred to inflation as the boogeyman, the Jason Voorhees, the Freddy Krueger of Wall Street. You get where I'm going at with that. Gold's up $10 today, up 0.25% at $49.45. Silver's up 3.8% at $86.55, up $3. Copper's a little lower. Natural gas is up about 4.6% at a time when America's about to get hit with cold yet again. The Washington Post is announcing significant layoffs. That's interesting. No, it's not. It's expected. With AI and a CEO, Jeff Bezos, who bought the Washington Post largely probably to be invited to political parties. I know that's cynical. I know it is. But it doesn't look like his goal is to run a great newspaper over the longer term. And to report news, it's more so to curry favor with the administrations that are in, whether it be the Biden administration or the Trump administration or whoever's next. Speaking of whoever's next, Trump has been trouncing all over the Constitution, talking about wanting to take away the potential for state-run elections and going more with a national. The Republicans have suffered losses in midterm elections and recently lost one in Texas that really has historically been a Republican stronghold, and they got trounced. So the Trump administration's talking about nationalizing elections. That could cause the stock market to fall 20, 30, 40%. 20% wouldn't surprise me. 40% would surprise me. But that's what's going to happen over the summer? Is he joking? His administration says he's joking, but he seems to be saying it often. And that brings up another question. What if his mental stability is eroding and the 25th Amendment has to be pulled on him? That's another thing Wall Street might freak out about. Short-term freak out would be a buying opportunity if you happen to have cash. Now, again, I'm not predicting this, but it brings up questions that go through my mind. I'm going to have on Patrick O'Hare today for about a 15-minute interview in the second segment. He's always insightful, so I won't do a lot of market commentary to start off because he's going to carry the market commentary, which he typically does on Wednesdays. So there's some lingering weakness across tech and mega cap names. Broader market is higher for the Dow Jones Industrial Average, but there is lingering weakness out there. AMD down 15%, Nvidia down 3%, Philadelphia Semiconductor Index down 4%, energy up 1.4%, materials up 1.4%. The oil trade that I talked about as the next commodity bull rush is playing out well. Eli Lilly's up 10% after the company beat earnings expectations and delivered robust guidance. I don't follow their competitor, but I'm a little bit shocked at how, and I own Eli Lilly, I'm a little shocked at how well it's running away from competition in the GLP-1 inhibitors. Novo Nordisk is down 4.6% today. They issued a cautious outlook yesterday. Lilly crushed earnings estimates, provided upside guidance, reinforcing its position as the global leader in cardiometabolic health. Novo Nordisk sees unprecedented pricing pressure. Lilly sees a volume response enabled by a massive internal investments in supply chain resilience. Tale of two companies. I did a lot of research 3.5 years ago on Eli Lilly and Novo Nordisk and GLP-1s. I've shared that with you on our journey on the show. And my understanding then, as is now, Lilly's just a better company. On this day in tech history, in 2000, Electronic Arts released The Sims, with AI simulating autonomous avatars via motive decay and opportunity cards. Did you ever play The Sims? It wasn't my thing to have a make-believe home. But it does show you that it started a little bit of AI's hierarchical task networks in artificial intelligence planning influence modern multi-agent simulations, trying to optimize utility functions. The Sims mood, the simulations, echoed belief, desire, intention models in cognitive architectures. A little bit more going on in that game than you probably thought. Let's talk year-to-dates. Crude oil up 12%, silver up 20%, gold up 15%. The commodities are owning the complex. Bitcoin down 15%, Morgan Stanley Country Index up 2.1%. The S&P 500 is up less than 1%. International investing is beating U.S.-based investing. Russell 2000 up 5.6%. Walmart joined the $1 trillion club. I find this one kind of interesting. It tells us something about the stock. It tells us something about our economy. What does it tell you about the stock? It took 62 years for Walmart to reach $500 billion in market value. It took 2 more years for it to add another $500 billion, thus hitting $1 trillion. Walmart's stock price rose 3% yesterday, pushing the retailer's valuation to $1 trillion. It doesn't make software. It doesn't make semiconductors. Doesn't make AI, but it uses AI. It doesn't make robots, but they use robots. It doesn't have the coding software to develop apps, but their app is getting better and better. They may not be the pure play like Uber is on grocery delivery, but they have grocery delivery. They have a nice app now. They have curbside pickup, things that appeal to people like me whose household earns over $100,000, who typically have shopped elsewhere. Walmart's now appealing to me on a value side, an app side, a delivery side. They also have Rolex watches, which I'll never buy, and Bose headphones. So they're not just for the middle income and lower income. They're pulling in a lot of new customers tied towards higher income households. Amazon is hiring robots while cutting humans. Amazon is my stock of the year for the Magnificent Seven. And now I'm starting to feel bad because the Magnificent Seven is deteriorating right in front of a lot of people's eyes. I'll tell you when I sell. I still have Amazon. I'm not going to tell you what I have right now because I got to be wary of compliance and I've got to make sure I get that right. Ultimately, I think I have 5 of the Magnificent Seven, and I don't own Tesla directly, but I have all the Magnificent Seven in S&P 500 funds for sure. But Amazon has topped 1 million robots in its working facilities. They have about 1.55 million human workers. Probably in the next 2 years, you're going to see the Amazon have more robots than humans. Over the past 5 years, the number of robot workers has increased from 265,000 to over 1 million. 3/4 of Amazon's global deliveries are aided by robotics, from lifting and loading to sorting packages. Amazon is testing running humanoid robots in San Francisco for doorstep delivery. Some employees have transitioned into higher paying roles to manage robotic systems, while many others are facing an uncertain future. AMD slumping on no big new customer wins. They did get unexpected China sales, driving AI revenue beat. It wasn't a quarter that maybe 2 to 3 quarters ago the stock would be up, but today it's down 16%. The AI narrative has changed. Now it's not a one-way bus to profits. The AI trade's trading both directions now. Data center sales were merely in line with expectations. The division posted sales of $5.3 billion versus a consensus expectations about $4.9 billion. $390 million of that came from MI308 chips to China. No big customer wins was the story. Living in a world where press releases touting new major customers and partnerships, as well as flashy reveals on conference calls, they seem to be par for the course. Their conference call was downright boring. And it stinks because Lisa Su's a good CEO. The CFO, Jean Hu, they didn't really wow us. Now, today, after the stock's getting hit, the CEO is out on CNBC saying, we are doing nice. Demand is for our advanced chips is still, etc. Doing their best to salvage, if that's what we say. Defending the company's earnings results and forecasts, saying that AI is accelerating at a pace that no one would have imagined. Lisa Su said the chipmaker has seen a step up in demand and its data center business over the last 2 to 3 months, i.e. next quarter in the future. But why didn't she say that yesterday? And it's odd that she's going on CNBC today while the stock's getting hit. And again, I'm not judging. I'm just more of an NVIDIA person than AMD. And NVIDIA is going to report in the next 2 weeks. And it's going to be a big one. Will it be another nail driving into the AI trade? Now, on the other side of the AI trade, Anthropic says no to ads on Claude chatbot, weeks after OpenAI made a move to test them. Let's say there's 3 major chatbots. Claude by Anthropic. It's doing really well with businesses and enterprises. Gemini with Google's Alphabet, doing really well with consumers because we have Gmail, we have Google Drive, and it's all tying in nicely. A year ago, I was more of a Chat GPT person, but this year I'm more of a Gemini person. Now, I'm not against Chat GPT, although I do find the CEO, Sam Altman, annoying. That's not fair because I'm basing my opinions on media appearances. I find him almost as annoying as Mark Zuckerberg. Now, Zuckerberg's doing great with AI on an advertising integration in the business side. The large language models and the chatbots, not so much. So there's winners for sure. The Magnificent Seven no longer looks like a pure AI trade. It's starting to fragment. We're going to have to come up with another set of alphabet numbers to explain this away. But Claude saying we're not going to do advertising basically says we're not as weak as OpenAI right now. OpenAI has inked more than $1.4 trillion worth of infrastructure deals in 2025. Introducing ads to ChatGPT could help the company meet those ambitious spending commitments. Digital advertising has long been the primary revenue driver for other big tech companies like Google and Meta. Foregoing ads within Claude, Anthropic could miss out on a lucrative revenue stream, but the company is not being shy about its decision. Anthropic will air a 60-second pregame ad and a 30-second in-game ad at the Super Bowl with the tagline, "Ads are coming to AI, but not to Claude." That's quite clever. Because don't we all hate ads? Is that not the assumption here? I think it's the assumption here. Let's take a look at some of the other winners and losers on Wall Street. Uber's down 6%. The ride-hailing company's fourth quarter earnings and first quarter guidance missed expectations. AbbVie is down 6.2%. The drug maker posted earnings that surpassed analysts' expectations and issued strong guidance. Performance was mixed across its product portfolios. Lilly is up 9.4%. Revenue of $19.3 billion also topped expectations. They issued a better than expected forecast for 2026. Supermicro up 12% after the AI server maker reported better than expected earnings and revenue for its quarter. Results could end Supermicro's recent run, though. Tighter margins remain a concern for investors. Enphase Energy up 37% today. The solar energy company posted better than expected adjusted earnings. I used one of their products in my solar panels. It was glitchy, but that was 4 years ago. Have they fixed that problem? They upped their first quarter revenue guidance. Seems to be moving in the right direction. Microsoft up higher after having a horrible run. Since Anthropic released a new plugin to handle a variety of legal tasks, the new tool is fueling worries that the AI boom will drag down profit and sales for software companies, of which Microsoft is, they got the soft in their name, a software company. But the whole industry is getting hit like Salesforce hard. If you take a look at a 5-year chart of Salesforce, you're like, is this a tech company? Because it doesn't look like one. Let's take a break here. Come back and bring in Patrick O'Hara to talk big picture markets. I've got another segment after that. I've got a big event coming up this weekend. If you want to talk stocks, investing, financial planning, and much, much more, it's a Pints and Portfolios Saturday, February 7th, 12 to 2 in Pleasant Hill. It's a great opportunity for you to get your financial planning questions answered. What I'm doing in my portfolio, what are you doing in yours? What are you doing with your financial planning? What am I doing with my financial planning? What am I doing right? What am I doing wrong? I'll talk about a lot of product intimately with you, one-on-one. I'll buy you beers. We'll sip. We'll socialize. We'll get your financial questions answered. I'll bring CFP Travis McEuen and CFP Nathan Rogers to the event. You can sign up for the event at robblackshow.com. That's this Saturday, February 7th. If you're not doing anything, stop on by Pleasant Hill. It's one of my 2 trips to the East Bay this year for Pints and Portfolio 12 to 2. Sign up at robblackshow.com. That's robblackshow.com.
Saturday, February 7th, join Rob Black in Pleasant Hill for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by between noon and 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, February 7th, noon to 2 in Pleasant Hill. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this event in Pleasant Hill and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Welcome back in. Rob Black and Your Money. I'm talking all things financial with Patrick J. O'Hara at briefing.com, a reliable source of domestic and international news that you can use. I've been using briefing.com for, I think, 25, 26 years now. It's been a long time, Mr. O'Hara. Does 25, 26 years sound about right? Do you know when briefing actually started?
Hi, Rob. Good morning. Yes, when Briefing.com was founded 33 years ago,
Okay.
and I'm pleased to say I've been here for 29 of those 33 years. So time does fly when you're having fun.
It must be a great company to work with. One of the things I just recently found was that one of your founders, I believe, he publishes stocks that he likes on a regular basis, and he tends to do a lot of it at the start of the year. So there's always fun things to find at Briefing.com. Lots of things going on. You and I talk markets every Wednesday. 2026 is starting a little bit differently than 2025, 2024. So there's always something for us to talk about. Big rotation out of tech. Is that a trend that you're seeing? What are your thoughts on that?
Yeah, it's definitely been the prevalent trend here to start the year. And rather than seeing it as something that's concerning, it looks somewhat healthy at this point in that, when you look at where the money is going, you're having money rotate within the market, not necessarily going out of the market in a safe haven type of move. Rather, you're seeing it rotate into a number of the cyclical sectors, energy, industrials, materials, all outperforming the broader market by a significant amount year to date. But there is a little bit of a twinge of cautiousness, I guess you could say, that things maybe don't stay so favorable. And I say that looking at the outperformance of the consumer staples sector as well here early in the year. But by and large, we think that the tail of the tape is still one that's a very pro-cyclical tape and one that is optimistic still about earnings coming through and the economy coming through and the market registering another decent year of returns, albeit maybe distributed differently than what we've seen in the past years.
There's always something going on, and we're pretty deep into earnings season right now, a little bit more than halfway, I believe. Earnings, I think, are the number one driver of the markets over time, and I try to stress that to people as often as I can, the retail investor out there. How's the earnings seasons go? And maybe talk a little bit about the value that you put on earnings season versus press releases, versus the news cycle, versus the currency, the dollar, and inflation. How do the puzzle pieces fit together for you?
Sure. At a high-level view of it, earnings season's gone extremely well yet again. You have a blended growth rate right now with about 50% of the S&P 500 having reported at 12.2%, according to FactSet's data. And when we did our preview at the beginning of January, the consensus estimate was calling for growth on the order of about 8.2%. So we're seeing about 400 basis points of outperformance already. And what's interesting about that, Rob, is that you often see estimates come down in front of the start of a reporting period, but that wasn't the case this time around. We saw estimates go up. So you're not just getting estimates beating lower numbers, you're actually getting estimates that are beating raised numbers. And that's an important component of the bull market narrative here, because you had a market trading with a premium valuation, and to sustain that premium valuation, you needed the earnings growth story to come through as expected. And we would argue that it certainly has. And even though you've seen some indigestion at the market cap weighted level because of some of the rotation away from these heavily weighted large cap names, you do have a market that's hanging in there, still trading at about 22 times forward earnings, and it's being underpinned by the continuation of solid earnings growth.
With the earnings being as strong as they are, we have to look to other things to think about. You regularly write about the weaker dollar. You talk about politics, the Trump one big beautiful bill. What are you looking for maybe for the next leg up or the next leg down? And I guess you don't have to be that specific because it's a moving target, but what's after earnings season?
You're going to start hearing even more about probably the tax refund season as we get closer to April. And you'll start seeing those tax refunds starting to come in already for some people. But you're going to hear about the tailwind and the fiscal tailwind brought on from those refunds. And again, that's not a new story. The market has been grounded in that expectation here for some time, but you also have seemingly an economy or an administration that wants to run the economy pretty hot if it can get away with it without inflaming inflation. And arguably it's been successful in that regard so far, but that doesn't necessarily mean it's translated into having cured the affordability issue. Prices are still markedly higher than they were several years ago, even if the rate of inflation has moderated somewhat. So that's something that would be a focal point. And then even while Briefing.com follows cryptocurrencies. We don't spend a lot of time on cryptocurrencies, but
Sure.
An interesting, obviously, chain of events there in terms of the lower prices we're seeing cascading across that asset class. And there's some chatter that you could get some forced selling that might possibly ultimately bleed into the stock market if holders of cryptocurrencies face margin calls and need to raise funds to meet those margin calls. But so some turbulence there perhaps. And then, of course, we'll continue to see the ongoing AI trade and what that entails as far as opportunities and disruptions, which were readily apparent in yesterday's trading session with many software stocks getting hit really hard.
Just talked about software stocks, and we've talked about mega cap stocks and the Magnificent Seven technology companies. I noticed yesterday that Walmart's stock price rose about 3% and it hit $1 trillion. They don't sell software. They don't sell semiconductors. I guess they probably use some robots, but they sell groceries, and they're doing better online. These top stocks, are they telling us what our economy is? It's a tech economy and a discount retailer economy? I'm stretching. I'll let you take this and go with it wherever you want to.
I think there's some truth into what you just said there, Rob. I mean, it's probably a cliche at this point to keep talking about the so-called K-shaped economy, but that is the reality of the situation here, is that you do have the wealth effect that's kicked in for a lot of holders of stocks and homes that continue to spend freely, and then the affordability crisis for a lot of lower income households who aren't necessarily buying the academic argument about the rate of change in inflation slowing, but are just simply looking at higher prices that have exceeded the pace of their income growth. And so it's been more challenging for them to stretch their dollars. And so you're seeing them gravitate towards some of those discount retailers, obviously. Walmart, chief among them. And Walmart is in the sweet spot because it also gets the trade down effect from other maybe middle income to even upper income consumers that are facing some challenges. And aside from that, though, Walmart has just proven to be a great operator. And you're seeing that reflected in its pretty massive market capitalization. But so good company, good stock, and is in a good position to capitalize on prevailing trends in the economy.
Absolutely. It's funny because I don't want to personally own the stock, but I've talked about putting it in my children's accounts for the long-term patient investor. I just think it's part of our economy going forward. We are about 2/3 done with the interview for today. Anything that you're working on, sir, that you want to bring to our attention that our listeners and viewers might find important?
One thing that maybe your listeners are reading a lot about, mentioned it briefly earlier, is about the AI disruption and how it has been severely impacted more traditional software application companies and their stocks. You've seen some really significant drawdowns in that space. And everyone's wondering, are they on sale? Is it time to buy on the cheap here? I don't know. I can't say that I follow that space specifically. All I would say, or something to keep an eye out for, though, is that if there's a real strong belief that these things are oversold and that their business models are not at risk, some people fear they are, watch for insider buying, because you should start seeing CEOs and CFOs of these companies, if they're truly have conviction in the growth outlook of their businesses and that they won't get disrupted, you should start seeing them, I would think, buying these stocks at these much lower prices. So that's something to pay attention to. And another thing is, again, just this idea of the cyclical rotation and the nature of the economy running on the hotter side here, which creates opportunities in some of these other spaces that have been left behind in recent years. And so you're starting to see value outperform quite significantly, small caps outperform quite significantly, and we could be seeing an awakening of sorts that has some room to run here along with the economy.
Thanks so much for your time and your insights, as always. I'll send you a copy of our interview. It's Patrick O'Hare with Briefing.com, a reliable source of domestic and international news you could use. I'm going to have to go back. I may have been using the product for 26, 27 years now, maybe even 28. It shows you how much I like this product and how it stuck with me. And I think I've become a pretty successful investor. I think I'm going to give Briefing.com a little bit of a tip of the hat on that as well. Thanks for listening to the show. You can always find me online at robblackshow.com. That's robblackshow.com. You can find Briefing at briefing.com. I'm Rob Black.
Saturday, February 7th, Join Rob Black in Pleasant Hill for Pints and Portolios, a less formal event at a local watering hole for those close to retirement with $500,000 or more in investable assets. Drop by Saturday from noon to 2 p.m. in Pleasant Hill for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or are already there, this financial snapshot can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide you all the details on the location of the event in Pleasant Hill and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Saturday, February 7th in Pleasant Hill, noon to 2 p.m.
So a little market update as the morning's a little bit longer now. The S&P 500 is down 42 points, down 0.6%. The Dow Jones Industrial Average up 0.5%. NASDAQ's down 1.6%, down 385. I noticed that Apple has made a big move up, 16 points in the last 3 days. When tech gets volatile now, it seems like people flock to Apple as, well, people are going to buy phones. It's an odd little thing to say out loud. Russell 2000 down 31 bucks, down 1.2%. Let's take a look at Bitcoin, because that's the one that I think a lot of you are concerned about. Down about $3,200, 4.2%, sitting at 72,774. I'm going to talk about Bitcoin in just a minute and what analysts are saying. I don't have enough of a vibe or a technical skill base to tell you what I think is going to happen with Bitcoin. I own zero. If I get a feeling that it bottoms, I might try to do a trade on it, but I'm certainly not going to do a long-term investment on it unless I do something like a 2% trade where I sell 1% of the trade after it makes the move that I want it to, and then I keep the other 1% for a period of time based on more midterm or long-term. I don't know. You get the idea. An NVIDIA rival, Cerebras Systems, is now valued at $23.1 billion in its latest financing round. Intel said they're going to get into making GPUs, but there's an AI chip maker called Cerebras Systems. They raised $1 billion in late-stage funding, valued at $23 billion, nearly tripling its valuation just over 4 months after its previous round of financing. And some of their investors include Tiger Global, Benchmark Q2, Donald Trump Jr.'s backed 1789 Capital. AI-linked companies have continued to draw billions in private financing. It's the private market, so it takes a little of the risk out for you in the public sector. But we do watch the private sector very aggressively for trends on getting in, but also trends on getting out. When we see private credit blow up, whether it be in software and or AI chips, it'll be a warning sign to start thinking about other areas to trim your portfolio. The United States and Mexico are going to develop a coordinated trade policies on critical minerals. The Trump administration's economic plans continue in an evolving state that is less than desirable for Wall Street, that wants to know right now, what are you planning to do? Well, look at Palantir, still down about 13%. That's interesting. You tend not to own a stock on the first day it goes down. You tend to let it go down 2 or 3 days so that people on margin, they get their calls. Does that make sense? Uber has some autonomous ride-hailing lessons for Tesla. The CEO, Derek Khosrowshahi, he addressed what he called the misconceptions about autonomous ride-hailing during the company's earnings report this morning. His comments are meant to support his own business strategy, but they also bear some fruit for competitors like Tesla. Uber is working with Google's Waymo to offer fully autonomous rides through its platform, based in Austin right now, Atlanta, and Phoenix. It also operates a limited robotaxi service with AV Ride in Dallas, where an onboard safety specialist still sits behind the wheel. It's testing a robotaxi fleet with Lucid in San Francisco, so they've got 2 or 3 fingers in the pie. They're not trying to do the Waymo level. They're not trying to do it the way Tesla does it. They're testing everyone's strategies. recently, Tesla said it plans to expand its robotaxi service to 7 additional cities, including Miami, Dallas, Las Vegas, in the first half of the year. One of the central questions for Uber is whether autonomous vehicles will cannibalize its existing business or expand it. The CEO of Uber said, in Austin and Atlanta, where hundreds of autonomous vehicles are operating on the Uber network, our overall AV and non-AV trip growth has significantly accelerated. That suggests that the rapid expansion of robotaxi services in cities like San Francisco may not necessarily come at the expense of traditional ride-hailing. As far as the AV utilization, it remains a hurdle. Data from California Public Utility Commission analyzed the driverless digest, found that while Waymo's idle time has declined, vehicles still spend roughly 30% of their miles traveling, waiting between trips. Tesla, by contrast, has promoted the idea that customers could even earn money by lending their vehicles to its robotaxi fleet when not in use. Uber's hybrid model is combining autonomous vehicles with human drivers who can log on and off based on demand, trying to smooth out that variability of downtime. Most profits aren't in big cities. That's interesting. The CEO of Uber said, the truth is that the U.S. market comprises a long tail of thousands of cities, suburbs, towns, and rural areas with significant diversity in market characteristics and regulatory requirements. The company's 20 cities, the top 20 cities represent only about 30% of Uber's U.S. gross bookings and 25% of its profits. I probably skewed Uber crazy different because over the holiday period, my family got separated and they had to take an Uber all the way from Sacramento to the Bay Area. Pretty crazy long drive. And it was in a downpour from Sacramento to San Francisco. Crazy downpour. You know, those downpours where it rains and you're like, whoa. But it was too snowy to get up to the mountains. Roads were closed, so they had to go a different direction. As far as edge cases, Uber says that autonomous vehicles remain far from meeting the level of reliability and ubiquity cities and riders expect. He pointed to gaps in geographic coverage, weather disruptions, infrastructure failures that have sidelined AV fleets. You can always learn something from your competitors. Firefox is soon to let users block AI features in its browser. Don't know what I think about that one yet. The Mozilla Foundation, which launched Firefox back in 2004, their mission was to provide the online world with a secure, open source alternative to the web's then dominant browser, Microsoft's Internet Explorer. Firefox is trying to lure internet users away from dominating search engines. Google Chrome has about 71% market share. Safari about 15%. Firefox about 2%. Internet Explorer comes in right about 2%. But that's a little misleading because we're talking about Microsoft Edge, which is at 5%. So Microsoft shut down Internet Explorer and redid Edge as their browser. Still, some people are stuck with Internet Explorer with older versions of Windows. Strategists are doubling down on $45,000 Bitcoin price target after a fresh bearish technical signal. So a bearish technical signal. The CEO of Tallback and Capital Advisors, I've never heard of. He warned of massive downside for Bitcoin in late November. Good for him. He's doubling down on that call after seeing another technical breakdown in the preeminent crypto asset. November was the sixth time that a month moving average convergence divergence indicators sell signal had been generated. Bitcoin is now below where Trump's 2024 election win had him move the Bitcoin as far as being the most pro-Bitcoin, I was going to say CEO, but president of all time. The peak of 2025, 110,000 plus. The all-time high marked ahead. So there are a lot of technical terms right now. So Bitcoin ran all the way to 126,000. but you can start seeing the head and a technical chart indicator at about 110,000. I don't know if it's a Rorschach kind of test. Do you see it or not? But the number of people who have acquired Bitcoin above 76,000 is higher than the number of people who acquired it below. And that's a bit of a problem. Match Group is climbing as the CEO touts tender turnaround, ticker symbol MTCH. I jokingly used to refer to Match.com jokingly as the largest database of sexually transmitted diseases in the United States. It was a joke. A lot of people are burned out on dating apps, especially paying for them. And they're starting to go to things like LinkedIn and seeing, oh, that guy's cute and he has a job. Oh, that girl's cute and she has a job. And they're hitting them up in direct messaging. Paid users on Hinge grew 17% to 1.9 million. Match has reportedly budgeted $60 million for AI and product rollouts to its popular dating app. On Match's earnings call, the CEO said that its 2026 Tinder roadmap directly addressed Generation Z pain points. Very lackluster revenue guidance, but we spend $3.4 billion on apps that help us find love or passion or what have you. Don't know how I feel about that. It seems like a lot of money. Oh, happily married. Ooh. Netflix's Ted Sarandos is saying that big tech is trying to run away with the television business. A lot of people look at Netflix as the evil company. It was fantastic because while he was giving a speech to a testimony to the Senate Financial Antitrust Subcommittee, the guy sitting right behind him was dressed up as a monopolist from Monopoly. The guy with the big top hat and the white big mustache and the red bow tie. Someone was sitting right behind him, and I was like, I'm so distracted. I can't watch this. But Ted Sarandos is saying it's not us that's ruining television. It's Google, Amazon, and Apple that are trying to run away with the television business. And there's a lot of truth to that. But how clean is he when he's saying we're going after our own big merger with HBO and trying to leave Paramount as the jilted at the altar of love for mergers and acquisitions. Warner Brothers Discovery, Warner Brothers has as HBO. The shows that I watch are on Apple, HBO, a little bit on Netflix. I watch a lot of comedy specials on Netflix. And that's about it. That's about it. A little bit on Amazon Prime. But notice I didn't say I watch any shows on ABC, CBS, NBC, Fox. I'll watch CNBC if I have to, but very rarely. I'm more of a Bloomberg television kind of guy. Hims, publicly traded company, typically known for selling you pills to help you in the bedroom. They announced today that they're going to add a blood test. So they're moving in a different direction that detects over 50 types of cancer before symptoms appear. It comes at a $250 discount from the Gallery list price. You may have heard of this cancer detection test. It's by a company called Grail, ticker symbol GRAL. So it's trying to expand their customer base. And by going after Hims and Hers, ticker symbol Hims, Hims is trying to expand their product line. Hims launched its lab analysis product, which is its central part of its upcoming Super Bowl commercial in November. The advertisement unveiled last week alluded to a cancer detection product. Grail announced in October that it raised $325 million from several investors. I'm doing one of these tests after I go to my doctor. I'm not doing the Grail test with Hims or Hers. There's a company called Cologuard, or they have a test called Cologuard, that you basically poop in a bucket, seal up said bucket, go to UPS, drop off the bucket, send it back to the labs. Someone opens said bucket, oh my, and runs a test to see if you got colon cancer. It's got more than 90% accuracy, so it's better for some people who don't want to go under and have a probe put in their anus to figure out how many polyps they have or don't have. I'm not a doctor. Do what your doctor tells you to do. But Grail announced that it had filed for FDA administration approval for its Gallery test. The test has been available commercially since 2021, but approval from the FDA could position it to be covered by major insurers. Some plays on laboratories are Quest Diagnostics, ticker symbol DGX. More and more of our blood work is going to be sent out, and labs like Quest do a great job with it. I don't really like going into a Quest lab per se. I feel like everyone might be sick and I might get sick, but I think you're picking up what I'm putting down there. I have a big event coming up this weekend. What expenses do you have that could spike without warning? Have you budgeted enough for what happens in retirement, for gifts, for travel and repairs? What happens if you live longer than expected? Will you spend down all your money? What if your financial plan is wrong? What if you're making mistakes? What if you're adjusting U.S.-based stocks when you're seeing international stocks, small caps and mid caps thump, and commodities thump the S&P 500 this year and last year? Do you have room in your financial plan for one-time shocks? What do you want to think about with real estate? Long, short funds, what are they good for? They're good for eliminating capital gains. I'm going to be doing an event this weekend. I'd love to see you talking about events like this and ideas. Pints and Portfolio. Sip, socialize, get your financial questions answered. It's for people who are 50 plus heading towards retirement. I'm going to bring 2 CFPs and a mortgage lender. Enjoy a beer on me, maybe 2 beers, maybe an appetizer. It's in Pleasant Hill, California. It's a bit of a hike for me, but I'm looking forward to it. Saturday, February 7th, 12 to 2. I'm going to skate out of that and go to see my kids' soccer game at 3:30 in San Francisco. So that should be a good day for me because I absolutely love connecting with you. But on top of it, seeing my kid play soccer is a pretty wonderful time in my life as well. I used to play soccer, so played all the way into college and quickly decided I wasn't going to be good enough for pro. So I focused on business and I focused on investing, and here I am today. I'd love to see you this week in Pleasant Hill, California. It's one of my 2 appearances in the East Bay. You can sign up for the event at robblackshow.com. That's robblackshow.com. I'm going to take a break here. I'm going to come back for the afternoon podcast, New Focus on Wealth. You can find it where you find podcasts. It's shortly, temporarily taken down from Google's YouTube Music, but it'll be added back. Right now, you can find it at Spotify, Apple, and other places you find podcasts.
Saturday, February 7th, join Rob Black in Pleasant Hill for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by between noon and 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, February 7th, noon to 2 in Pleasant Hill. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this event in Pleasant Hill and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.